Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial mysteries of public companies. Today we're diving deep into Trutankless Incorporated's latest quarterly report, a document that should give us a real inside look at what has been happening with this company. Alright, let's get into the nitty-gritty of what is in this report. This is a 10Q filing, which means it is a snapshot of their financial health for the 3 months ending the 30th of June 2025, and a look back over the first 6 months of the year. For a company like Trutankless, these reports are critical to understanding their burn rate, their progress on product development, and their ability to stay afloat. First up, let's check out the balance sheet. This gives us a look at what the company owns, what it owes on a specific date. As of the 30th of June 2025, Trutankless had about $3.6 million in total assets. Now, that might sound like a lot, but keep in mind that a big chunk of that, specifically about $2.2 million, is in current assets. That includes cash, which is a whopping low $12,000. Yes, you heard that right. $12,000 in cash for a company this size is extremely low and tells us they are really on the edge when it comes to liquidity. Now, let's look at their liabilities, and this is where things get a bit more concerning. Their total current liabilities, the money they owe that is due within a year, is over $11 million. This means they owe nearly 10 times more than they have in cash, which is a huge red flag. Think of it like this: they have bills coming due for over $11 million, but only have $12,000 to pay them. That is a very tight spot. And then there is the accumulated deficit. This is basically the total net losses the company has had since it started. As of the 30th of June 2025, it stood at a massive $79.9 million. That means over its entire history, the company has lost nearly $80 million more than it has ever made. This is a classic sign of a company that has been struggling to turn a profit for a very long time. Let's move on to the income statement, which shows us how much money the company made and spent over a period. For the 3 months ending the 30th of June 2025, Trutankless reported net sales of about $94,000. This might seem like a small number, but it is actually a huge jump from the $11,000 they had in sales in the same period last year. This is a positive sign, showing some growth. Now, importantly, their cost of sales for this period was over $76,000. This means that for the products they managed to sell, it cost them a lot to make them, leaving them with only about $18,000 of gross profit. That slim margin means they have very little room to cover their other significant expenses. Speaking of expenses, let's look at operating expenses. These were almost $1 million for the 3 months ending the 30th of June 2025. A big chunk of that, over $818,000, was for professional fees. This often includes legal and consulting costs. It's a huge increase from the $7,500 they spent on these fees last year. This suggests they've been pouring a lot of money into getting the company ready for something, perhaps new production or new compliance. When we put all that together, the result for the 3 months ending the 30th of June 2025 was a net loss of about $1.2 million. For the 6-month period, the loss ballooned to over $2.8 million. This really highlights the ongoing financial struggle Trutankless is facing. They are losing a lot of money, and the sales, while growing, are not nearly enough to cover their costs. Now, here is where the cash flow statement really tells a story. For the first 6 months of 2025, Trutankless used nearly $1.6 million in cash just to run their daily operations. That is a lot of money bleeding out, and it is more than they used in the same period last year. This is a clear sign that the business itself is not generating enough cash to sustain its operations. Interestingly, they also spent over $253,000 on purchasing equipment during this period. This could be a good sign that they are investing in future growth and production capacity. However, with their extremely low cash balance and high liabilities, this investment is a risky move. It's like buying new furniture when you can barely afford rent. The only area where they saw positive cash flow was in financing activities, bringing in over $889,000. This means they had to borrow money or issue stock to keep the lights on. This is a common strategy for companies in trouble, but it is not a sustainable long-term solution. And that brings us to the going concern note. This is a crucial disclosure where management itself admits there is doubt about the company's ability to continue operating for the next year. They specifically mention the low cash on hand, the massive accumulated deficit, and the significant net loss they plan to raise more money to survive. But as they themselves say, there is no guarantee they will succeed. This is a huge yellow flag for investors. Companies admit this when they are in a very precarious financial situation. Going back through the notes, we see Trutankless has a history of name changes and restructuring, including spinning off a subsidiary. This can often indicate a company trying to find its footing or shed underperforming assets. Now, let's talk about related parties. These are transactions with individuals or companies that have a close association with Trutankless, like its directors or officers. As of the 30th of June 2025, they have significant notes payable to related parties totaling over $5.1 million. This is a substantial amount of money owed to insiders, which can sometimes raise questions about the fairness of these transactions. They also owe over $750,000 in convertible notes payable to related parties. Looking at their convertible debt, they have a lot of it. As of the 30th of June 2025, they had over $750,000 in convertible notes payable with significant interest rates, some as high as 24%. These notes are a ticking time bomb because they can be converted into stock, potentially diluting existing shareholders. Many of these notes also appear to be past due or in default, suggesting a serious cash crunch. Under commitments and contingencies, we see they have operating lease agreements. These are for physical spaces like offices or warehouses. They have future lease obligations totaling over $1.3 million. While this is typical for a business combined with their other debts, it adds to the pressure. They also have some legal matters. One is an SEC settlement for $25,000 with still $20,000 remaining to be paid. Another is a default judgment in Florida for over $38,000 related to installation issues. These are not massive amounts, but they add to the company's financial burdens and potential headaches. The risk factors section, which is incorporated by reference from their annual report, is where companies disclose all the things that could go wrong. Given the financial situation we've just seen, it is safe to assume those risks are pretty significant. Things like the inability to raise more money, operating at a loss, and tough market conditions are likely high on that list. Looking at the sales of equity securities, it's clear they've been issuing a lot of stock for services and cash over the past year. This is often a sign that the company is struggling to raise cash through traditional means and is using its stock as currency to pay for goods and services or to attract investors. While it can keep operations going short term, it dilutes the ownership of existing shareholders. And here is a kicker. Management themselves stated in this report that their internal controls and procedures are not effective. This means they do not have strong enough systems in place to ensure accurate and timely financial reporting. This, combined with the going concern warning, paints a very grim picture of the company's operational integrity and financial stability. So, what is the story here? Trutankless Incorporated appears to be in a critical financial situation. While they are showing some growth in sales, it is nowhere near enough to cover their massive expenses and debts. They have a huge accumulated deficit, very little cash, and significant liabilities, including to related parties. The fact that management itself acknowledges doubts about their ability to continue as a going concern and states their internal controls are not effective are serious red flags. They seem to be relying heavily on debt and equity issuances to stay afloat, which can lead to dilution for existing shareholders and does not address the fundamental issue of profitability. Investing in a company like this is extremely risky. Their path forward likely depends heavily on their ability to secure substantial new funding and drastically improve their profitability, which history suggests has been a challenge for them. Alright, that is our breakdown of Trutankless Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.